everybody, and welcome to the stream. Welcome to obviously the close for Monday. I hope everyone had a great weekend. I hope you're having a good session, and let's get into it, I guess, by talking about this S&P 500. How's everyone doing? Also, big shout out to Cool House Media iGuide. Thank you very much for becoming a member. Appreciate that very much. All right, so let's take a look now at some of the things that are happening for the session. So obviously we've had a little bit of up and now a little bit of down. So the market has basically started and closed in at the same area, but it has run a little bit moving through. We've hit the resistance, which is over here. And this resistance has been around that 43.85 area. And then we've sold off from that zone, coming right back down. Probably for a lot of the bears today, we're looking for a little bit more of a movement, looking to get maybe some kind of lightning bolt movement here on one of the bigger time frames. Let's have a look at the 1 hour. Not really any too much swing here. So problem with today is we know we have a resistance. That's good. For anyone that doesn't have that drawn, probably should, because I think it'll be a pretty valid buy zone should we get through it in the next session. So we probably need to angle that up. So we have it, understand if it's a key level or not. Certainly looks like that zone makes a lot of sense. So we draw it down to the bottom here. And what you're looking for is you're either looking for potential reversals in the next session off that level, creating like kind of like a triple, or just a breakthrough. And then of course you've got to go bullish to the next zone fill, which is over here, sitting at around the zone of 44.80. So that would be a good day trade. And I think that's worthwhile having on your charts just because it makes sense. You've got to basically put your opinion at the door here in terms of what you think is going to happen to the market really is irrelevant. What's happening with the price action is the most relevant. So if the bears are going to get control, so be it. If the bulls are going to get control, so be it. We don't know yet how that's going to look. Let's now scroll into the 15-minute here. Just have a quick look around. All right, so we've got those two lows. I'm not sure if we want to use that. Just thinking about if any of these are valid. I don't think that's valid, so we're not going to use that either. We've got the supports over here. Maybe it's not easy to go bearish here either. I mean, obviously it's going to be a very key zone, 42.65-ish. And we're trapped within this area. It's most likely going to be these two zones that really trigger, the bigger levels. You close below there, algos come in, try to push back down to the 41.20. That obviously in turn takes the NAS down, etc., etc., etc. So it's going to be pretty important there. All right, let's see what everybody says here. David says Tom needs to move to the USA ASAP. Do I? Probably. No worries, Dean. All good. And Charles probably puts it here. It's not easy to go bearish here either. Not really. So I'm not just crazy looking at what is going, what the hell? Yeah, no, it's not easy to go either way. Let's see what the crowd is though. We've got 500 people here. Thank you very much. If you can smash that like button, does help us out, guys. Put it in. Are you a bull or a bear at the moment? Chuck that in the comment section right now. Bull or bear, guys? All right, let's take a look at the NAS. NAS hit pretty much the longer term line. Let's have a look here on the daily. Not the daily, probably the 4 hour. So there we are. Kind of just trying to keep it down a little bit here. Obviously, I've posted this line a few times. Now, here's the problem for a lot of traders, and this is why it's so important. We've got to put together the facts of the price action, all right? So we've got the left, we've got the head, we've got the right shoulder. And we now have our critical zone. So this is that 14,200. Let's go 50. If we breach that, it's significant, because what does that do? It puts in a rally potential of something like this. And then we take that rally distance, and we might not believe in it exactly, but we certainly think, wow, okay, is that going to take us to 15,200? So we're going to be very careful about what happens here. If the bulls get control in this zone, then the next zone makes a lot of sense to go towards, which is 15,200. And if we start pushing into that, then we're pushing into full recovery territory, where basically the market might do this. And you might say, but how's that possible with everything that's going on in Russia and et cetera, and the Fed and everything like that? The only reason it's possible is because this is actually doing a bit of the Fed's job for it. And you can tell that the market is starting to perceive that as well. Now, I'm not saying it is actually doing it, but the market is perceiving that this particular event that's occurring at the moment in the world, the conflict, is actually pushing down on 10-year rates. And it's also pushing down on, obviously, 2-year rates. So we saw them drop 8.91% and 7.16%. Seems like predominantly most of you are cunt side. Bernie is a dragon. Bear on tech. Bond, neutral, bond, bear. I'd say you guys are pretty split. Almost down the middle, 50%. So probably consistent with what the market's showing us as well. Let's take a look at one stock that's doing a little bit better here today. Hit resistance into the close. And that is the old Tesla, 874. Hits the bottom of our trend line and sells off. Good take profit here was 860. I think that was a fairly good day trade. Let's have a look at the way the day trade worked. Basically just came out of the gates, broke through the resistance, and as Tesla likes to do, rallied through. Tesla loves a good rally. Now we've got movement down, moving up, moving down, moving up, moving down. Kind of could go two ways here, yeah? Because we've got that significant, we've got lower highs, but a lot of people are going to be looking at this and saying, yes, but if this breaches through, Tesla to the moon. I think it's less about Tesla and more about the market itself getting through. You saw that NAS before. The NAS is probably the most important chart for you to be looking at with this, but a breach through would be significant. So we're at a pretty nice level. We're obviously starting to look weaker here for Tesla. You can see lower high, lower high, lower high coming into the close. We've got 20 or 19 minutes to go. Breach through below here will not be that great for Tesla. Could push it down a little bit, maybe push it back down to this level here. So just remember, that's kind of what we're looking at. Let's just take a look at this NAS smaller time frame, see if it gives us any inkling to whether they want to short or not into the close. No idea there either. We really just don't have any information. Sometimes you get information and you think, yes, I know exactly what the market's going to do. And sometimes you don't. I've been checking the bond market for you before the stream. I didn't really get anything out of that. Usually I get something out of that, but I didn't quite get anything. Best sector for today has been 10. Let's bring on the sectors so far in terms of how they look. Here they are. So we've got 10 solar. We've also continued to see clean energy do pretty well. I think that's off the back of the UN announcement, but also just in general, they're looking very bullish. I mean, TAN in particular is been in the private community talking about that a little bit. And I've also posted on Twitter as well. Follow us on FX Evolution if you're interested. Post some extra stuff there. And we've got XLE, XME, MOO, all those. And then down the bottom, we've got the recovery jets failing the most today. So defensive side, not really purchased. So defensive side is not the one that's purchased today like it was on Friday. You can see there's some sell-off of that. Tech is not really that hot. It's mostly all these things that are more rate kind of related. So like TAN, PBW also gets hit by rates. So if the rates drop, that's a good thing for these guys. Crypto doing well today? It certainly is. We'll talk about that a little bit later. Ash says, Tammy called it. Tam was a great call. Yeah, Tan's got a lot of runway in it, though. Just remember, it's not just the action today. I think there's actually more in it. You'll notice that the good hyperstocks, quality hyperstocks, ones that have reported well, done well, look at the way they're up today on this right-hand side here. We've got things like Net up 5, Crowd up 6. Obviously, ZS reported did kind of poorly, but still up 7. So great sector here in cyber. Cyber's really coming through here. TDOC was up a lot more before. You know, they're starting to really turn that corner. Hoz says TAN is the future. Well, I think TAN's an easy bet on what the market or what the government's going to force. Well, they basically force themselves to do it. I mean, whether you believe it or not, they're going to do it. Now, it's going to initially actually also impact things like oil. You'll actually see oil. You'll see certain metals as well potentially go up hard. I mean, they've what is it? Aluminum. Oh, I call it aluminium. I think that's going to go up pretty hard against this as well because it's going to need to be smelted fairly heavily. So the market here is just it's just indecisive. I mean, basically, it doesn't really know what it wants to do. If you were looking at this 15-minute, you're thinking bullish into the close here, only because obviously, what have you just seen? Little pin, movement through, get through here, bullish into the close, basically trying to flatten it up. If you're feeling bearish, you've now got a good little zone underneath 14,000. Then we start going down. Be warned, though. I mean, it's not easy. I can't pick a real direction here. I've said that the bottom could be in only because I was checking the bond market and it's showing me that that's possible. I haven't seen other indicators I usually see that point towards further downside going crazy haywire at this stage. And we are putting pressure on this resistance. Now, there are plenty of reasons to be bearish, but when we see a rejection off here, obviously huge amounts of algo trade coming in, the risk on, and you start looking at the other sectors. So let's now think about it. What have we got that's suddenly gone, that's been beaten down, that's gone better? We've got Tesla sitting at resistance. Okay, we know that daily 20 years, huge deal, trend line as well. Then we scroll through and we go to some of the stocks. Let's have a look at some of these hyper stocks. We're at resistance, but look at those recoveries. Very aggressive recoveries. I mean, look, just check these as percentages. 36%. Volume, very high, very high. ARCG, starting to go back to our resistance. Huge pullback. Think about it as a Wyckoff. What's it telling you? Max pain. Certainly was maximum pain. The average return from the market, negative 15% during recoveries. Let's just bring up some stats here. Where are we? Obviously this thing, but whatever about that thing. You might say, but what about the rates? Well, this has done the job a little bit for the Fed here. The Fed are getting lucky in some ways with the way this is playing out. Darren Jones, $10. Tom, looking at your screen of US 500 15-minute, looks like a reverse head and shoulders. That's correct. It's an inverse head and shoulders, Darren. Are you talking about 15-minute chart, though, as well? Let's take a look here. The bigger one, for sure. Though not completed or anything like that. Let me bring up US 100 here. Yeah, you're absolutely correct. If you just joined us, welcome. Thank you very much. As always, Darren, you're absolutely correct. It is. Left shoulder, head, right shoulder. What can you do? If that's what the market wants to do, don't fight the market. If you're a trader, who cares? You shouldn't care about direction, except for you being in the right side of direction. Remember that. A trader doesn't give a crap. What does matter is when you are an investor and you're trying to buy that dip and you're trying to buy, better price and getting those long-term holds in. That's when you get sad. And when you say, oh, I missed out on 30%. So what? As a trader, it doesn't matter if you missed out on 30%. It's all about high probability trades. Okay? If you get high probability trades, you will be more successful. You will feel less stress. Just because somebody got 30% in space last year, how did that work out for them? Not very well. How many of you made 50, 60% in a few days or 120% in a few days, they then gave it up. If anyone's willing to tell the rest of the people, how many times when you made serious gains did you give it up about 2 weeks later by placing similar trades and then making similar mistakes? If you did, let the people in the chat know. They need to know. Darren Jones, thank you very much. But yes, I agree. That is a inverse head and shoulders. A few of you, yeah? Oh, yeah. Here they come. Literally everyone. Yeah, because it's a difference. I was listening to this guy on the weekend and I was doing a little bit of research because you're always learning. Yeah. There's no reason why you shouldn't continue to learn. I make mistakes too. And I was thinking about whether I could have predicted this fall better. The answer is yes. And I now have added something in that I don't usually use that much that will help me to predict this easier. And look, that's why, and I believe it. Look, the good thing is once you've been around long enough, you kind of know what works. So if I go to a channel, or no, I'm not so much YouTube. I probably don't use that much. But if I go and I read an article, or I read a book, or I read something like this, I instantly know whether it's crap or not. You can pretty much tell. If you've been around 10, 15 years, you can really tell. And I'm sure a few of you have a bit of an understanding there. Look at this market rally here into the close. You can tell when things are crap because you know predominantly what works and what doesn't work. And of course, if things make sense, if they have some kind of, sensible approach, they generally have more chance of potentially working. If they are simple, funnily enough, they have a better chance of working. If they are convoluted and complicated, they are generally a scam. Okay. Oh, check out my sweet algorithm, man. I can't tell you what it does, but let's just say it's really good. It never loses. Why do you think it never loses? Because what probably it's doing is using some kind of bridging system, or could be using some kind of martingale system, or some kind of basically averaging system where it picks a direction. Let's say it's bullish and it buys and then it takes profit. But if things go against it every little while, it just adds a little small portion on until the market rebounds and then it closes off the position. Oh, the yield curve looks like this until it doesn't. Always looks good. So US 10-year is on the right-hand side here, 1.842 to a 1.442. This is a big deal for the markets. I mean, obviously, it's helping out the US 500, US 100, especially here. Look at that, only down 0.14% now. But look, the next session is most likely the one that really shows us better direction. I mean, look, if you've been buying this, especially since down here and anywhere through here, I don't blame you. But if you're a bear in the market, you can still be a bear. It's not impossible to be a bear. You can very much be a bear up until 15.2. All of this, so if we breach the way that we're thinking on the US 100, the next possibility is probably here, 15.2. If we then breach 15.2, bad luck bears, you lose for the time being. You'll have to come back later. It's not going to be easy once you get through these zones. Not even quant people or anyone will be as bearish up here. You've got to have, it's going to be very, very, very careful up here. But the next session is still open to being bearish. And that's the problem. What you're doing is trying to figure out those key zones. We know the base has happened. We know there's some volume down here. We know there's good signs, still a lot of negative signs. So it's a 50-50 kind of bet. And I don't like 50-50s, ideally. All right, let's scroll through a couple of more stocks. We'll take, if we've got anything here, let's read some comments. Got $77, $4 super sticker. Thank you very much, man. Got 7 minutes till the close here. And $77 says, seriously crushed the SPY calls today. Very good, Sandollar. That's awesome, man. Thank you for the coffee, bro. John Wynn says, Been there, done that, probably do it again. We'll all go back and do it again. 906 people joining. Thank you very much. Appreciate that. Matthew Carr says, too many times, obviously making mistakes. I'm scared to play options. Well, options is actually slower sometimes than you may think. Most people play options with a few days left, thinking I'm going to get rich. Look at me. And theoretically, I mean, if you'd bought some of the calls recently, you may have done incredibly well on things like 10 and things like the hyper stocks, but you also lose a lot. So it's short dated options. You really have to have high conviction in that zone or location. Let's have a look at some other things that are going on here. I just want to quickly bring up this stock, which I understand absolutely nothing about. So I'm not going to pretend that I know anything about SoFi, but I know that it's got earnings in a day. And I also know that it's presenting similar characteristics as the other ones. So look, this stock the only interest of it is that when it rallies and all the retailer traders get into it, they tend to like this one a lot. You can see the volume has still remained very high recently on the weekly here. So we've got that bullish hammer, which is consistent with the market. We've basically picked up fairly consistently with the market. Again, a positive sign here for it. So it's going to be a very interesting earnings period for this one. Now, it's obviously very gamblery because you're looking at it from a perspective of can it achieve greatness? I think that if it does well, it's going to go on a little run because that tends to be what the retail trader likes to do with this stock. You know where this would probably be, if it had a good earnings, it would probably try to shoot itself into this $13.40. And if it has terrible earnings, all right, back down and wait for the accumulation base. But the volume is relatively high. A lot of people purchasing this. I don't know anything about it. It's an incredibly risky stock, as far as I'm concerned. But these are the types of ones where depending on how much the call is, which I'm sure is really expensive, there are ways and means to potentially try to extract value out of it. It's just that that when people get hyper, it's kind of like Tesla moves really, really, really hard. So we've got about 4 minutes here. Looks like the markets are turning green. We suspected the close was coming in. That 15 minutes showed us the way here on the NAS. What can you do? If the 15-minute was showing us, that's what it is. So it looks like we're going to close around resistance. SP 500, just quickly go over to that. There it is. Again, inverse head and shoulders is potential here. You see that big right shoulder. You know what's at stake. And if we price action this one out, take the whole thing, it's pretty big. I mean, it's actually predicting to breach past our big resistance of 4460, 4600, 4586. So it's a huge deal here for what the market's doing. Gary saying, he says, not touching stocks like SoFi or Bros until 1.5 years from now. A very stringent, good ruling often can be there. And Edwin says, wow, positive again, amazing. Yeah, look, people think it's irrational. The market has sold off allocating to many rate hikes and the Fed being stuffed. Now, all of a sudden, because of the conflict, it created instability, which drowns part of their problems. So we'll have to find out now what they end up doing. But it might even have lowered, or it has lowered expectations for 0.5%. It's now under 0.5% for the first rate hike. They will rate hike. I cannot see them not doing it. That would be very weird. Let's take a look at gold, 1909. Gold had a weird session so far. Went up, came right back down, went up again. You got to be careful in gold. It's at a precipice of big moves. Obviously, we've been talking about to the 1970, but a lot of predictors in gold aren't. I mean, we're still bullish it, and you've got to be careful here, but a lot of it depends on rates. Gold is actually incredibly rate driven. Now, let's see if anyone actually knows how gold works. Do you think gold is a good inflation hedge? No. is the answer. Is gold a deflation hedge? You might want to do some research on that. You might find out that it's better than you think. Ukraine conflict already priced in. A lot of the market is already priced in, yes. Yeah, Thad, we're not talking about downtrend, uptrend, technical, really at anything on so far. We're just talking about the earnings and the fact that if it has a good one, you can see where that resistance is. It's a big percentage, that's all. I'm not doing it. I was just looking at it. So let's talk about the sector I like the most today and the sector I'm actually liking a lot, which is Enphase and TAN and all these types of things. The whole UN climate change thing got released. I mean, we know government's going to spend into this. I feel like this whole conflict in the Ukraine, it's galvanizing to a degree a lot of the Western world, and that is also creating this idea that people have forgotten about price. Like, everyone knows they're stuffed, so that all these governments around the world just printing cash, and they're prepared to do weird things right now. So for them, they're prepared to potentially move into speeding this process up. But I think what you need to ask yourself the question is, if they speed this process up of solar, of wind, what are they smelting? Okay, that's a question you really want to ask yourself. And the market will already be there. It's already eating up all these minerals and metals. But basically, what do they need to smelt predominantly to get this off the line? And whatever they're needing to use, which is pretty disgusting, by the way, the amount of metals they're going to use to supposedly go green. It's a very questionable process. In fact, there's almost this counter argument to it in some ways for especially the smelting component. What they need to smelt, if this is going well, then this actually is the initial big winner. Okay. And I know the market's already there, but you've got to ask yourself this question. Outside the box thinking is what's up. Why is oil so high? Cartels, but also because this movement towards green energy is actually meaning that you need more oil and you need to burn it very hardcore to get there. It's kind of crazy. Jeff Abrams says MP Materials. Yes. Let's take a look at 10 so I can show you what I mean. Look at the breakout here. Very aggressive action. I still think we could maybe turn around and come in like that. But it just, look, this is one of the signs that I look for. A very aggressive candle on the bottoms. And we've got one there that's kind of again pointing towards it. And actually the smaller market has been pointing towards this stock market recovering here, which is pretty weird, but it's actually been the one that's showing more strength. IWM into the close. Well, we've already finished up the close now. Look at that. The last leg on its last legs. We know where we can't be bearish anymore. It's very similar to the rest of the stock market. If you're looking for the turnaround, it's still possible. Okay, bears can still get control of this market. Absolutely. It's just looking bullish at this stage. Dan was an awesome trade. Tom likes it more longer term. Yeah, I do. I do actually like it for the recovery, if we keep getting the recovery. It's one of those ones where you trade it, you take a scale off, and you leave the rest on and go, yes. That's the type of thing. So IWM, we had a theory, and that theory was obviously the A, the B, and the C move. Got down to the low, and then it reversed. Okay. So would I trade this? The answer was no. I don't actually recommend IWM very often. We've seen what IWM can do. Yeah. Has it been a good trading vehicle? No. Can it be an investment vehicle? Yes. Is it accurate from TA perspective? Not really. It's not that great. Okay. So we want to be careful with it. And you've got to learn from your mistakes sometimes and say, okay, well, like, would I have taken that trade again? The one that was here, and we called the bull here, and we obviously saw a bit of movement. The answer is yes. But you've got to realize that it needs a stop loss as well, yeah? Just remember that. IWM, there could be a trade coming up, double bottom, breach, strength. Trade is okay, but investment, it's okay, but there are better vehicles usually. So trade, entry, stop loss. You gotta be careful here. Ed Volp says, you buried Roku. I did after earnings, but the dip has been bought with a respectable volume. I'm not sure if it's going to retest support. I'm happy to bring Roku up onto the charts. Look, you've got to go, what's your highest conviction? Okay. And I've added these are my higher conviction weird stocks. Okay. If I like my end phase, so be it. I like my end phase. And if I like my little weird cybersecurities and my Etsy's and stuff, here's the Roku. I think it's sick. I think the chart tells you it's sick. Is it up 32% from the base? Yes. But every single look, how much is end phase up? It's probably up very similar. Get the little end phase out. It's up 42%. So which one's up more? The answer is end phase. So I would rather be in that theoretically in terms of strength rebound. This is a very questionable stock. I've never understood it, so I'm uncomfortable with it. I don't get it. Now you'd say, but Tom, it's so easy to get. What don't you get? I don't get the moat. I don't get the scalability from the moat perspective. But if you're looking at it, sure, it's closing the gap and the runway could still be very significant. It's just I can't hold it because I have not enough faith. We'll check crypto in just a second, by the way. Thank you very much to the 900 people that are here. Mark Wilkins, hello, Tom. Like the double bottom forming on a double PN, small breakout. All right, let's have a look at that. A double PN. So with Roku, it's just filling that gap, and you've currently got a resistance coming up. Yeah, very nice, man. Yes, that's right, Mark. Very good. Earnings is finished, which is good. Didn't seem to like itself on the earnings. We've got the base formation, and the breach at this stage. It's a nice another sign of strength. Look, you're going to be at the mercy of the market, but as we've just seen with the market itself, it might not be as weak as we think. That is a closeout, though. Significant moves. I mean, you might have some problems initially just here, just because it'll go there and then have a little bit of resistance, 65. And then you've got probably something like 75. And the runway after that is quite significant. This is a packaged software company. Is Disney any good? Let's have a look at Disney. I haven't checked Disney in a race recently. Look, Disney is slower than the others. It's more of an older stock, so it just depends how much percentage you want. I would say Disney is showing less strength. You ask yourself in the market, what's rebounded? If the market looks like this, if a stock doesn't look like that, then it's weaker than the market at this stage. And this is very indecisive. Rejection week, rejection week, rejection week in the middle. So probably, I think Disney's a good company. I think it'll be fine. But it's not really exciting me on the recovery play at this stage. Zoom getting crushed after hours. Oh, man. Really? I told you it's a piece of crap. I don't get it. The moat is so low on these companies. Remember Skype? Remember AOL Messenger? ICQ? All of these things. So I've got kind of a new rule, I feel. Maybe that new rule is that not only do I hate companies with low moats, but maybe I also dislike things to do with social media and voice messaging. Social media stocks tend not to be very good. Yeah. What is a moat? Well, it's when I've got my castle and then I dig a little hole. The reason why, well, that actually is where it comes from. So think about it. If I do have my castle in the middle and then I've got my little moat around here, it's very easy for you to attack me. Yeah. So that this is the whole concept. My little moat, my little bridge, and my door going into the castle. Obviously, worst castle ever, but you can get in. Whereas if I had my castle over here and my moat was like this, and then I put some alligators in it, some sharks, and there's my bridge. I can just chop my bridge off. And it's very hard for you to get access to me. How are you gonna get me back in the day? Good luck. I shoot you everywhere here. So that's what you want. You want a company that basically has competitive advantage and can basically get, not only do they have competitive advantage, but if someone comes for them, because inadvertently through a business's life cycle, as they're growing, they're staying good. But then as they go through, let's say, stage 3 of their growth cycle, they have to start beating off competitors. Are they able, or do they have a niche that is stronger than their competitors? And of course, in Zoom's case, the big problem that they've had is the elephant in the room, Microsoft. So Luke says here, Tesla has a big moat. Well, Tesla definitely does have a moat. And but now what they've got to do is they've got to continue to accelerate, and basically their competition might be here. Yeah. They're coming. There is competition. Does Tesla successfully go, screw you, and then stuff them over by just continuing to innovate and continuing to be better? If their product is continuing to be better and in front, then they're good. But where businesses stumble, and you've got to be careful about investing in them fundamentally, is when they stumble here and don't address it over the next 2 quarters. So a good example of that was Zscaler, actually. And they struggled a little bit to address some problems in the past over here. But what happened was the management addressed it heavily, and look at the stock now. They hired the right people and they addressed their problems, and they've continued to remain in their edge. Tesla does have a moat, Dave. It's just more in its software and AI applications, more than and their car is actually moated as well in comparison to, because when you go into an original, like any kind of the original cars, like I went and saw one of these Hyundai ones or something, and you sit in the car, and then if you sit in Tesla, you got your steering wheel, and you've got like just a screen. It's quite nice, simplistic. Now you go into any BMW, or Merc, if anyone has one, and you go in, there's the steering wheel, and then there's like knobs here, stuff here, stuff here, stuff here. The console's insane. More stuff, more stuff. Just random over engineering for the sake of over engineering. And you're like, what does any of that do? Anyone that has a Merc or a Beamer or any of those kind of cars, do you even use any of the things there? I would say you probably use 20% to 10 to 20% of all the little weird gadgets they chuck on the car. But they love giving you buttons. It's a different, it's like you've engineered to be simple, and that worked for Apple. You've got to remember, Apple's simplicity is what got them through. They designed everything for an 80-year-old. If an 80-year-old couldn't use their phone, they decided it was flawed. All right, let's have a look at Bitcoin here, and we'll go through some commodities. So Bitcoin, interesting, very strong, big 24 hours. But we're still struggling here a little bit with the potential of maybe this, but I don't think that's really that important, this trend line. I put it there, but let's just remove that, because trend lines can sometimes be more interpretation. So let's think about what we actually breached. And we breached here 40,500. Let's go and have a look at the price action as it breached through. Came through incredibly strong, slams through it. It's a pretty big deal. I mean, I think it's really less about the crypto and more about the stock market still at the moment. If risk off happens and the NAS starts dropping, I still think that crypto will take a dive. But you've still got to look at this and you've got to say, well, what just happened? We've got a trough, we've got a peak, we've got a higher trough, we've got a higher peak. Is the next stop for the Bitcoins 44,000? It seems likely. I mean, that's the next logical conclusion level for Bitcoin. So it looks like it's bullish at this stage. The rest of the coins are moving with it. Obviously, here, Ethereum, a bit behind the Bitcoin, but it could be the better trade. You know, it's following. As long as the rest of the market can hold up, what's Ethereum doing? Little inverse head and shoulders here, yeah? Got the right shoulder, got the line that you're looking for. And you also have your strength line, which is 3,200. There's a good percentage gain here in Ethereum. And I'd probably leave it to those two. What I'm noticing is that the pickup in the alts is still incredibly weak. People just don't have faith in the market yet. So the Bitcoin Ethereum trade is the better trade, usually. Darth Vader says, I was blown away with the monitor screen I saw recently in a Merc rover. Okay, well, there you go. Hopefully they're making those types of things. Gary saying, he says, no, I have a Mercedes C-Class and I use maybe 5% of the garbage I have. Yeah, there's some serious buttons on some of those things. Buttons actually make it simpler. They do and they don't. I think if you engineer something really well, I mean, Apple was just fantastic at it. I used to work for them a very long time ago. And the way that I always thought, you know, they were crazy. Like back in the day, they thought so much ahead of everybody else. They just don't anymore. But the way they did it was even, you know, when you open like an iPhone box, even the box suction. So the way that it sucks onto the other box when you're taking it off, it's designed to actually force you to take a certain period of time generally to open it to create an anticipation so that you feel like you're opening something special. So even the opening process, the timing process was thought out by them. Now, if you ever find a company like Apple again in early stages that are thinking this way, and it's all about the whole experience. If they can do something like that, you know you're onto a winner. It's what I call like an X factor in investment. If you can find an X factor in your next big investments, think about what that is doing. If you love the experience, then probably a lot of other people are going to love the experience. And there's a lot of people that will find it. You know, Discord, as soon as I used Discord, I knew it would be a massive success because it was leaps and it was so much better than any other gaming product out there for talk. And look at it now, it dominates it. Whereas I don't like Telegram. I think Telegram is frankly relatively like Twitter. And they're just going to be sitting there. They'll always have an audience, but they're not a business I would invest in. You can make the argument for Tesla, but it was years ago as well. The argument for Tesla was that it had acolyte fans that would go and do the marketing for them. They don't spend money on marketing. That's what Apple did. Apple had a picture of some person wearing iPhones and just like running around in a circle dancing. I mean, it made no sense. Their Mac ads made sense, but obviously they literally got to the point where they didn't even have to advertise back then. All right, anything else? So we've done the cryptos. Let's have a look. We've done gold. We're kind of feeling bullish, but still just cautiously bullish, but still bullish. US oil. This one is very questionable. I still don't like this trade, okay? And I think you can tell why I stopped liking it. I stopped liking it here. I know it's up overall, so you say, but Tom, look at me. But the mental strain that this trade would have taken on you over the weekend, holding it, and the whole conflict in Europe. I mean, this type of position would basically just scare me. And I don't really want to be scared, ideally. And that's why I don't trade this area. because for me, it's scary. Now, if you're in the energy stock, it's not very scary because you can absorb it a bit easier. But when you're trading a leveraged product in oil, it's really weird. So I don't think the direction for oil has been cemented yet. You look at the weekly, you can see the rejections, etc., etc. Anything else? 2-year, 10-year, as we mentioned before, are down. Stocks across the board are recovering. Mostly hypers. It was all about hypers today. So if the next day kind of comes through, you'll probably see the other stocks do a little bit better than the hypers. It's like a one step forward. The hypers are really popular. The next day, usually the other ones come along. Lama says JP Morgan told clients all in Europe in January. Guess they were unloading their book. Yeah, it's really weird how they do that. I mean, considering they access so much information and they know fairly well where stocks go and how they go, and also the science, it's unbelievable the division breakups. So they've got like their nerd room with all of the algorithm guys in it. They're all making tons of money, going, yes, we know what's going on, and then they don't talk to the advisor room. They just some economist in here making up stuff, and then he sends over, hey, look at this. I recommend you buy Microsoft, and then everyone here gets on the phone call. But this one doesn't talk over here, that's for sure. It's really weird. Zoom just sank. Yeah, we saw that before. So, interesting times. All right. Well, look, I mean, we're in a market here where obviously things are starting to look a bit more bullish. You can see after hours, stuff's looking a little bit better. We will do a video on it. It's a constantly evolving situation. I'm probably going to have to, like, if we go bearish, we're going to have to change direction. I mean, I'm longer term bullish here on the markets. I think that they can work out and things can go well. And I've maintained that the whole way through. And I think you've also got to put things in perspective. How much are you really behind here on the market? So the US 100, top two current price, is still down 14.6%. Remember, everybody here was saying, ha ha ha, you all missed out against people that bought in here. Like, as in, if you didn't buy here, they were laughing at you and forcing you into this zone. So I think you've got to just realize that for some people, DCA, dollar cost averaging, in quality is going to be some of the best concepts. And I'll always tell you this, the weekly 50 exponential moving average, top concept anyway, you can obviously take this with the way you want to, top weekly 50 exponential moving average is still one of my favorite concepts of taking the nibble for the DCA. Okay. And where are we right now? We're still sitting around it. So really, I'm not soothsaying the bottom, but I definitely say sometimes that this area is predominantly good. Now, if it breaches under that area, you've got something to worry about, but that has not currently happened. Tom, refer to your last day's rally presentation if you can. Okay, so I don't think that's relevant anymore, unfortunately. So the rally percentage is not enough. So it's 3% over the last 2 days, not the higher level. So what he's talking about here, everyone, is, oh, my goodness, this one here. So unfortunately, it's not enough percentage to even get you in the chart. Final 2 days of the month. So it's 28th in America. Obviously, 1st here of March. So the final 2 days of the month were not these percentages for the S&P. Remember, this is S&P stat. So therefore, put that over here. It's not relevant, unfortunately. Amazon held today. Any thoughts? I'll have a look at Amazon for you. I think consumer discretionary is pretty beaten down at the moment. I mean, you've got the bigger double bottom potential. You've got that daily, which was it a 4 hour, wasn't it? It was a weekly. Okay. So you got the weekly that hasn't been breached above. Maybe that's a significant sign. Yeah, I mean, it's fine. There's nothing wrong with it. I just think there's stronger stocks in the market at the moment. The beaten down hypers are probably where it's at, but they're reliant as well on interest rates actually not going up at the speed that the market thinks, which I have a suspicion is true. This conflict, the market going down enough, allows the Fed to lessen their rate hike. And I've noticed a lot of economists are starting to change it. It's what the problem I have, though, is that everyone's starting to see that. And I don't like it when other people see something. It becomes less likely to occur. So how many of you are thinking that way? Anyone in the chat? How many of you are thinking that way? Always bullish Microsoft. You probably have a big brain. There's nothing wrong with that. Netflix, I'm not convinced about Netflix. I feel like it's stage 6 on its business. And Netflix will need to, I may be completely wrong, but I'm not convinced on Netflix. The bull curve for that stock, I feel like it's going to get taken out by some other stocks. Like someone's going to try to buy it, and it's a massive acquisition, I understand. But yeah, I'm very bullish Microsoft. Yep, that's true, Michael. But we actually know that Amazon's coming for TDoc. They're fully doing it. Yes to no rate cut. Wow. I think there's definitely going to be a rate cut, but yeah, I think it's going to be less. Thomas Otto says we need Tesla above 900. You need it above 945. 950 would be the area, Thomas. That would be good. Barber, look, I would steer clear of those stocks. I don't think you need to go in them. Why do you need to be over here? I mean, if you're stuck in it, sure, but you're going to watch it because you're stuck in it. But don't be on this stock. What's the point? Ask yourself the question here. Does this price action interest you, or does TAN interest you, or does ARK interest you, which are down heavily, obviously, or does any of the type of stocks or Microsoft, which is going to give you best return? Buying this isn't going to make you a happy panda. Yep, some big news coming up this week. Yes, there is. So we'll just quickly scroll through that. Remember, it's non-farm payrolls week as well. So for Tuesday, we have ISM manufacturing PMI 10 a.m. New York time. And then we have OPEC, and we've got ADP non-farm employment change numbers, FOMC Bullard, our good friend Bullard, the crazy man himself. And then we've got Fed Chair Powell testifying Wednesday. Then testifies again, ISM PMI. So the market actually tends to buy into Powell. And then he talks and then it goes down. That's usually the way it works, yeah? How dare you to short Barber? I'm not shorting Barber. I'm just not buying Barber. Well, that's another thing, another consideration, isn't it? The risks of the Russian market were severe. So are there risks in owning some overseas stocks? Possibly. All right, everybody. Well, thank you so much for joining us today. If you enjoyed the stream, please remember to subscribe. Thanks for the support. Appreciate the donations and memberships and everything else that happens. And we'll see you for a video a little bit later on the channel. So remember, we'll cover that. Somebody asked about NVIDIA. NVIDIA's still quite weak on the charts. And you can see here in the post market, it's not doing fantastically. So just NVIDIA is a great stock, but it needs work to be comfortable. I was okay with buying it here for the gap close. I thought it was a good trade. But at this zone, it's really in problematic area. All right, everyone. Thank you so much for joining us. If you enjoyed, as I said, subscribe, give us a like. We'll see you later. Thank you.